Hey everyone, Dan here. Today we're going to look at reading candlesticks in just a couple of ways to read candlesticks. We'll sort of do a whole series on candlesticks because there's many things to unpack, but today we'll just go with some fundamentals of double tops, double bottoms, hammers, and inverse hammers. As always, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. Just a small percentage of the folks who watch these videos are subscribed, so I would really appreciate it if you do consistently watch these, if you would get on that subscribe list. All right, so let's get right into it. So this is a 1-minute chart, but candlesticks you can judge on, or you can read, I guess, and then make your judgment on any time frame. So, this is the 1 minute. If I flip out even to the daily, you have just a bunch of candlesticks there, too, that you can also, read and interpret as you will. So everything that I'm going to talk about today on the 1 minute still stands with different time frames that you might look at. But to first kind of explain what a candlestick is, so a candlestick shows you the price movement that occurred within the time frame that you're looking at. So let's take a look at this one because it's pretty easy to see. So during the minute of this candle, which was at 10:01 a.m. this morning, because it's green, I know that the body of the candle is the solid part, and then these little pieces that jut up from the top and from the bottom are called the wicks. So just like a candle, you have the candle body itself, and then you have a wick that points out the top with there's also a wick that points out the bottom. But the body of the candle signifies, if it's green, the bottom of the body is where the price opened, and then the top is where it closed. So obviously, it's a green candle because the price closed higher than it opened during that period of time. And the inverse is true with the red. The price would have opened at the top of the body and closed down at the bottom of the body. Now the wicks indicate even though the price closed here, at some point during that minute, the prices did reach up this far. Okay, so that's the highest point at which the price reached, but it doesn't include, it is over the price where it closed. Same thing at the bottom. So these prices, the price stretched all the way down here during this minute, but it was lower than the opening price. So at that point, while that was happening, literally in live time, that candle would have appeared red while this wick was being formed. And then because it closed slightly higher than it opened, it closed green. All right, so hopefully that makes sense. If it doesn't, just back it up a minute or two and rewatch that, because I think it should be pretty straightforward. But bodies and wicks are the most important thing that we want to be looking for. And then let's start with the doubles. So a double top and a double bottom signify the inverse of each other. So a double bottom signifies that the price may start moving bullish, may start moving up. A double top signifies that the price may start moving bearish, may start moving down. And so let's look for some double tops and double bottoms. What you are looking for is, if you kind of look, let me give you an example. So this is this is a collection of bottoms here. So this wouldn't exactly be like a double top or double bottom, because that's like 7 bottoms essentially right there that are all within the same area. So, it's okay if it's more than one. It just sort of signifies that it's a longer period of time that the price is balancing at that price point before it's pushing off. But if we just look at these two right here, these two are a pretty solid double bottom. And then also I'll point out why it's not your most ideal double bottom. So it's pretty good because, as you see, it's almost identical where the bottoms meet here. This one is slightly higher. The bottom of the wick is slightly higher than this one, but they are very, very close to being identical. So lining up really, really well is what your most ideal situation is. I guess I could draw a trend line between these and you'll see that it's not quite... See, it's slightly up. So if it's not, I don't know how easily you can see it on the video, but just to prove the point there. So So that's pretty solid because they're very, very close. So you don't want something like these two. I mean, even these two, for example, they're relatively close, but they're pretty far apart compared to these ones, right? Like these, you almost have to put your cursor there and say, is that the exact same level? And then you can see it's not quite. Whereas this one, just with the naked eye, you can very easily see that those aren't at the same level. On the other hand, why this isn't the most ideal double bottom is because ideally your bottoms are the bodies and not the wicks. And so let's see if we see one that is a body double bottom somewhere here on Tesla. So this is sort of like an interesting one because this is almost a body double bottom, but there is this big wick, which is something else that we'll talk about in a second. But this is pretty close to a body double bottom. Because there's so much price activity in Tesla and it jumps around so much, it's hard to find two exact bottoms that don't include wicks. And this is going to vary from stock to stock. So just realize that some stocks are going to be better at forming clean double tops and double bottoms, and some will be a little bit what we'll call dirty, which will just mean that, like, there's a bottoming out here. There's sort of like a double, triple bottom here, but it doesn't include just bodies. It accounts for some wicks. And so that may just be sort of like a byproduct of Tesla, and something that you should just have as part of your rules with Tesla is, okay, the double bottoms don't have to be body only. We can account for the wicks in Tesla. So those are double bottoms. So again, anything that lines up very, very close, it doesn't have to literally be two, it could be more. Some of them get pretty like unclean, whereas this isn't like 12 like bottoms necessarily. It's more like these were the important ones. But there will be little consolidation areas like this one that look like a bunch of bottoms, but just be cautious, especially at first when you're trying to decipher what's happening, because also like these two here could have looked like a pretty solid double bottom, and then it took some time for the price to take off. And I guess the other thing that I should say is that just because you see a double bottom, like here for example, it's pretty close. It doesn't mean that the next, I don't know, 3 or 4 candles are going to be like just rocketing up. That sort of is an area that you can look at for a trend reversal. So if the stock price has been coming down, then you look for a double bottom, and then that should signify to you that there's an opportunity for it to reverse trend, which sometimes it takes a lot of energy to slow that train down and turn course. So sometimes it's not an immediate gratification type moment, and it takes a little bit of time for the stock to stabilize itself and then move up, which you see it did do there. So if we look, so the same thing basically stands for double tops. Again, you want them to be as close to each other as possible. Ideally, body to body as opposed to wick to body. This one is pretty close also. But basically showing that the price tried to push higher, there wasn't enough buying pressure at the top, and so it got pushed down and sold off. So that's why it indicates that that the trend might be reversing, because that's sort of like, okay, that's the like upper tolerable limit for the buyers at the moment, it seems, is wherever the top of those candles are. Here's a couple that are pretty close to double tops. This is an interesting one because this is basically like a triple top. But as you see, sometimes you get that and then you get a push down and then you get like this double, triple bottom pretty soon after. So it just sort of depends how volatile the stock is, how quickly it moves. But if you didn't want to be trading this quickly, meaning you didn't want to take a position here at like 701 and then catch this like triple bottom and sell out at 699, if you're a day trader, scalping and things like that, that might be in your wheelhouse. That's where you could just move it out to the hour if you're taking longer positions, and you could say, oh, there's a whole bunch of bottoming out here, but there's also, this is what gets tricky with some of these longer term time intervals, is that sometimes the stock price looks like it's both bottoming and topping out at the same time, and so it's kind of just moving sideways and not doing a whole lot. And candlesticks are a tool in the toolbox, but if the candlesticks aren't telling you anything, then you should go to some of your other indicators like channels, RSI, MACD, that sort of thing. Okay, so those are the double tops, double bottoms. Now the next thing that we'll look at is hammer. And a hammer is like, this is like a pretty like iconic hammer because if you think of like what a hammer looks like, it has like this handle that you hold onto, and then it has like the hammer head that you actually hit things with. So you want your hammer to look like that. Now in the most ideal world, this wouldn't have even had the slight wick that's jutting out of the top, but this is really good because it's very skinny, meaning it's mostly the wick. It has a very, very small body, and it's at the bottom. So it happened as the stock price was getting pushed down, and so that's what you want to see on a hammer. And also, I know there's some debate whether like a hammer at the bottom has to be green to qualify as a hammer, or if it can be red, like this one. Again, I think that you can have variability in this from stock to stock. What I would say as my general go-to rule, I don't care whether the hammer is red or green. I take it as a slightly better position to be in if the hammer is green, but I definitely consider it as a potential bullish factor even if the hammer is red. So you see, this is an even better example of a hammer, but for the fact that it's red and not green. So yeah, so again, what happened here was basically like the price opened here, it got pushed down all the way to here, but there was so much buying pressure that the buyers said, oh, I'll take that at that price, I'll take it at that price, I'll take it at that price, and they pushed the stock price all the way back up here, almost to where it opened at. And so that's why it's taken as a bullish sign, that there's a lot of buying pressure below the price point that the stock is at, trading at that moment. And so same thing here. You know, any of these hammers, you know, you could look at them. There's even another one here, and basically say, you know, what happens immediately after that should be basically your next question. Because this would have looked like really bullish, and then it would have sold off a little bit, but then it would have ultimately, this would have played out well for you if you held it long enough and didn't kind of like panic sell down here. Here's like a really good like red hammer for it being a red hammer, but that sort of caught all of this downtrend, all of this selling pressure, hammer, and then 3 green candles in a row, stabilized a bit, and then continued to push sort of in a channel-like motion. But that would have got you from like, say, 694 up to, you know, maybe 701 or so. You would have seen like all this topping out happening and these like lower highs starting to form from here to here to here. Could have given you a signal to take profit there. All right, so inverse hammers are if you were to take this hammer configuration here and just flip it upside down. So the wick on top is very tall, and then the body is very skinny, and then there's little to no wick coming out the bottom of the candle. So like this would be an example. Actually, this is a very, very good one. I know I'm gonna sort of like capture 2 here, but let me see if I can make this a little bit more like see-through so we focus but don't obstruct. Okay, so this red one is primarily what we're focusing. So remember how we said we want the hammer to look green if we want it to think of it as like the best version of a hammer. It's at the bottom and it's green. The inverse hammer is at the top and it's red. But again, for like all intents and purposes, my trading philosophy is that they can be green, and I don't super discriminate. I just know that a green inverse hammer at the top, I'm going to take slightly less seriously, if you will, than I would an inverse red hammer at the top. But this red one here fits all the qualifications. It's big wick on top and then a smaller body, no wick coming out the bottom, beautiful, and it's red, and so that should have signified that there's some downward pressure here. Now, interestingly enough, you had the inverse hammer, and it sold off a little bit, right? It just sold off, we'll call it maybe a couple bucks. And then it had this red hammer. So it's sort of like the battle of the inverse versus the hammer. And then it actually ended up like being pretty choppy, but ultimately pushed up. Yeah. So, and also I guess I would say like, you know, this inverse hammer, like you do want the body of the candle to be as small as possible. So in terms of like, if you compare this inverse hammer to like this hammer, that body is very, very small. That body is certainly several times bigger. So while it looks kind of small, it still is slightly less ideal than you want. So things get pretty nitpicky on things like the hammers, the positioning, the color, how big the body is, you know. But again, big important things to keep in mind. Hammer, you want it to be at the bottom, so you want to see the hammer form when the stock is getting beaten down. Ideally, it's green. I think it's okay if it's red, but you decide that for yourself because there's certainly debate out there. Inverse hammer, you want the tall wick on top and the small bottom, or sorry, small body. Sorry, I'm trying to find that one again. There's not a lot of inverse hammers here. Oh no, I've totally lost it. But wherever it was, you saw it, you know what I'm talking about. Yeah, big wick on top, small body. Oh, here it is. Big wick on top, small body. Ideally, this is red, but again, I think green is okay as well. Should signify that there's some selling pressure in the market to at least keep an eye on. So again, things to kind of blend with the other tools that you have in your toolbox. Definitely, I wouldn't take this as the standalone buy and sell signal in a stock. As you see, there's a lot of false positives here. You know, but I think if you take into account additional factors like RSI, MACD, maybe what the moving averages are telling you, you know, if it's in a channel, what it's doing in the channel, those sorts of things should give you additional information to play the stock well. All right, well, I hope that this helps and gives you some ideas that you can start to utilize. And no matter what you're trading this week, I wish you the best of luck. I hope it's a good one, and I will see you in the next video.